All right, Crypt Nation, Bryce here, coming at you with another quick market update. Per usual, I think I'm gonna go this way actually today. You know what, guys? As the markets are slowly selling off, I'm not seeing a huge amount of momentum from the bears taking prices below 30K. It seems like a lot of support there. And so kind of in the news, something pretty big actually came out today. It was a report by Fidelity Digital Assets, which is an arm of Fidelity, right? A household name. I think they're about $13 trillion of assets under custody that Fidelity has. Guys, they came out with a report that showed 70%, 70, right? 70% of institutional investors have expressed that they have the desire or the plan to invest in digital currencies and cryptocurrencies. There wasn't a specific time frame, but that report came out literally today. And so what that tells me is that not only are there still big names that are out there conducting crypto research in the midst of this mid-cycle correction, right? When you have guys like Fidelity doing in-depth institutional reports, it not only goes to show that there's still an interest, but the interest is coming from institutional customers that Fidelity services. Now, the quality of investors, of people that have been buying this dip, the likes of Cathie Wood, for instance, who runs the ARK ETFs, and these are one of the most preeminent macro investors in the world is Cathie Wood, and she's got a very good nose for tech. And actually, I just saw this morning that she bought $7.7 million worth of the Grayscale BTC Trust Fund. So that's a really good sign. In fact, the other group of investors that I track, I think a lot of people probably track them, the Rothschilds investment group, and they added 300% exposure to the crypto market since April. So they've been upping their book slowly but surely. So a lot of the big money, they're slowly, patiently getting into this market and letting the prices come to them, and they're negotiating their bid. Now, on the other side of the equation, on the bear side of the equation, not the bull side, you have kind of like the regulators, right? And so the regulators are wanting to crack down a little bit on stable coins. And so there's a lot of uncertainty in the market. And I think that's a little bit, why we're seeing a slower recovery than expected from the Bitcoin mining ban in China. So I think that this US stable coin fear and uncertainty and doubt that's getting pushed has caused a little bit of a depression in prices. But as this task force gets set to meet over the course of the next few months, as Janet Yellen, who's the Secretary of Treasury, as she's already stated they would, they're going to come up with a set of guidelines and really a formal proposal for stablecoins. And I think that once the industry has that sort of certainty, it will be clearing resistance and giving price, an easier way forward upwards. Because right now, people are so concerned. That is a terrible sound from that backup car. Wow. People are so concerned right now that there's looming regulation that's going to really, take crypto down. Because, if they regulate Tether too hard, if they regulate, USDC too hard, it will suck a ton of liquidity out of the ecosystem. I think that, at the end of the day, regulators don't want to inhibit innovation, especially American regulators, because they know things would go overseas. And so what I think will happen is that regulators will really try to take this innovation that's happening in crypto and foster it and give sandboxes or little beta, work zones, that I know Warren Davidson has proposed before, who's a senator out of Ohio. And there's all sorts of different ways for regulators to sort of foster innovation and not regulate things out of existence. And so I'm not really, entirely scared away from the market right now. Because of, potential looming regulations on USDC or anything like that. I do think that the market is, with this uncertainty that is looming right now, a little fearful. So that's why we're seeing less of a strong trend in prices. But, as the sort of, the impatient folks get weeded out of the market, as the speculators and the highly leveraged people get washed out of the market, it's going to be the folks that were able to stick around and last it out and really hunker down that are going to make it. And it's also the people that have been building positions in fundamentally strong cryptocurrencies and using these opportunities of down and low prices to really buy the dip. So now if you're still looking for the best areas to be, you know, gem hunting, as I like to call it, to buy the dip, the best coins, the best value, the best sectors, guys, you gotta hit that orange button below. You can subscribe to our service for just $1 for 2 weeks. And there you'll get a ton of actionable insights on how to crush this market, whether it's trending down, whether it's trending sideways, trending up, right? We're always on top of the market and, you know, delivering those sorts of actionable insights with subscribers. So again, $1, 2-week trial, come check it out. You got nothing to lose.